Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 10th of February. So I've seen some really good moves this week, and even in this last session we've seen some of the big highs that were actually getting reached earlier in the week completely reversed on some of the key indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see really even from last week, like we were talking about at the levels where it was literally selling off from, and it continued that move all the way down. Now, realistically, if we extend this line that we've got here, this is a roll reversal zone, a very strong one at that, which is around that sort of 68.80 area. You can see that it basically came down and touched it and then went straight up to the 20 moving average again. Now, although we do have two big wicks hitting that level, that is another roll reversal zone. So it's basically bouncing in between all of the key levels. And I think that's really, really important for scalping standpoints, especially because realistically you've got very defined targets from the point of taking profit and also where you need to put your stop loss. So yeah, this level here at 68.80, you can see very clearly that it's been a previous resistance point and previous support for quite some time, and it's very recent too, like we're talking about the middle of last year. So realistically, you know, we did expect this level was going to be pretty strong, and the bounce up to the 20 moving average happened pretty quickly. But of course, to get involved in those scalping opportunities, you have to go down to the smaller time frame. So I mean, even if you get down to a 15-minute, which is about as low as I go, if we fix that up, you can see that even the little mini lows that we saw around this level here, once you get a bit of a move on, and you can see the momentum has shifted on a smaller time frame, as soon as you get that pullback to the 20 moving average, you're off. And then you've got a series of higher highs and higher lows, which is obviously what we're looking for here. And once you've got that in play, a move straight up to the 70-cent mark is pretty straightforward. Now, it sold off there pretty quickly, as you can see. Like we've gotten, there's no question about that. But again, the sell-off was far more aggressive than the move up. But that's quite often the case, as you know. It comes down a lot faster than it goes up, especially after a session big move that we saw in the indices, and we'll look at that a little bit later. So pretty good trading on the Aussie. Hopefully you're able to actually capitalize on that move back up to that key area on the daily, which is around that 20 moving average, as you can see. And then, of course, the candle looks awful looking at that, and you say, how could you possibly trade that? But then when you go to the 15-minute chart, you can see how easy that actually was, especially from a scalping standpoint. All right, we'll move over to the US dollar CAD now, and this one's basically behaving in a manner that we would have expected as well. As you can see, once it got above the 20 moving average, it's been in a bit of a range. If you go to a smaller time frame, it's going to be very range bound in this point here. Very difficult to trade from a swing standpoint, but scalping is not too much of a problem, especially if you go down to the smaller time frame. So as you can see, you had your series of lower highs and lower lows. All of those were giving you opportunities to take advantage of each move, really. I mean, the move up, you could have reloaded at that point there and moved up to the high. And even on the way down, you can see we had series of lower highs and lower lows. Touch of the 20 if that's what you're waiting for, which is one of my favorites, of course, and you're going to get pretty reasonable moves on the way down as well. Look, where it is now, it's a bit of a stalemate. You have to go to the daily to see that, of course, but it's basically trapped within this range still, and a little bit to go before it gets to real resistance. That 135 is going to provide a lot more resistance to what we're seeing right now. It's kind of intermediate resistance here. So a little bit of a move up and a break of this level, say a break of the 130. Probably the 134.80 would be the key there, and then we'd be off and moving up to the next little mini zone. On the flip side, I wouldn't be looking for any shorting opportunities until we actually get below the 133 sort of 90 area. I want to see it close below the 20 moving average and realistically break all of that nonsense, and then we can start targeting the previous lows at around 100 pips away from that, around that sort of high 132 to mid 132s, which is not a bad place to be aiming. And of course, the real support's going to come at around the lower 132, so that 132 sort of 40 area. That's very strong roll reversal there. So realistically, if we get a break below the 20, it's a pretty easy target to aim for. Good scalping opportunities and swing, but a break above the this little mini level here will give you a scalp up to the 135, and a break above the 135 on a daily chart, and then we're going to be off and running, basically looking for the highs at around the 137. But then we've got a series of higher highs and higher lows, of course. So yeah, pretty good trading in that part. All right, we'll go over to the US dollar yen now. And yeah, look, this one's been playing the technical game quite well as well. As you know, we've broken out of this channel and basically hit the 50 moving average and then come back down and found itself at the top of this little mini range. You can see here, this has basically held it up, and realistically, I would probably expect that it will hold up a little bit longer now. What we want to see, of course, is a break of the 50 moving average now in that 132.80 area, a daily close above there, and we're going to have the lightning bolt that we're looking for, and then the easy move is going to be up to the 134.70 area. That's going to be a pretty easy, trouble-free run if it does get past this level here, because really there's not a lot of price action in between, so it should find itself up there fairly quickly, and that's not a bad target to aim for. But really what you want to be doing, if you want to go to a scalping mode, you basically want to try and get up to that 132.50 area as the starting point for your scalp. But if we get a daily close above there, then we're off up to around that 135 target, which is a pretty straightforward target. Failing that, of course, if it gets below this level again and breaks below the 20 moving average, then we'll be looking to the bottom of the continuation of that trend line, and we'll be looking back down to around that 128 area. So yeah, either way to play it, I think you've got pretty good zones on both sides. Scalp between these levels, and then once we get a serious break on either side, we can start aiming to the key levels after that. All right, we'll move over to the dollar index now. And this is playing the technical game perfectly as well. As you can see, we had a big move up, and you can see we hit the 50 moving average, but more importantly, we hit that roll reversal zone. Very strong resistance there at that 103.40 area. Hit it and then started to sell off. Look, it's been a funny sort of session. As you can see, it tried to push lower and it has rejected a little bit. We'll have a look at the euro. Of course, the euro is going to be the better trading on this, but as a guide for where the euro is going to go, we're seeing a little bit of strength on the resistance side here. You can see we've got the 50 moving average and that roll reversal zone holding it down now, and it has done for effectively the best part of the week. So hasn't been able to break through, even though it has tried. Now, look, a daily close above the 103.70 area, and then we're looking straight up to the 105 as the next target. So, and that's going to short the euro, of course. We'll move over to the euro now. And you can see here, it landed on the support level that we expected it to do. 50 moving average as well, basically the inverse of the dollar index here. The 107 level is going to be a pretty strong level, obviously. It's tried to fight it, and it's fought it all week, really. It had a big move up to the 107.90. It did try to get to the 20 moving average, and the overhead resistance hasn't quite reached it yet, but it's not over for it. It's still got a lot of support here. And if we see a little bit of a pullback, this is where I would expect it to go. So if we see any form of higher high and higher low sequence on the smaller time frames, if you're not already in it, you're aiming for that 108.20 area to 108 is a level that I'd be looking for. That's the key level for the take profit, and a break below the 107 and a daily break, that is, then we start targeting the lower lows, and you can see that that's going to be a $105 index for this to get down here. So realistically, trade up to the 108 to 108.20 area as a scalping mode. If you're going to go to the 15-minute chart, look for pullbacks to the 20 moving average, and then sort of take those in the momentum and direction of the trend. But if we get a daily close below here, below the 107, then we're going to start targeting the lower moves for next week. All right, now we'll have a look at the S&P 500, and you can see we obviously pulled off from here. Last week we were hitting this zone. No real surprise that we found resistance there. We talked about it to death, so no real surprises there. It's trying to get to the 20 moving average as we speak. It has a pretty ordinary session throughout trading last night in the US. As you can see, we're a little bit of a retracement back. The new candle's open, but no big significant moves yet. If the weakness continues, look, the 20 moving average is going to be the obvious target, 40, 50. Whether that holds it or not, I'm not so sure now. Like, it's a pretty big pullback off this level. It's attempted 4 times to break through it, and it hasn't been able to. So I'm very mindful that that's going to be a pretty strong resistance moving forward. And it's going to take a bit of a momentum push from down here. Like, if it gets to the 20 moving average and starts to show signs of a change of trend on a smaller time frame, and we start to see a little bit of movement to the upside, then I could see it attacking it one more time and then pushing potentially higher. But until it does that, I'm not really interested in this trade. I think we've pretty much traded it to death, and we've got some pretty good scalps on it. So now I think what I wanted to do is get above the basically the 4,200, a daily close above the 4,200, then a retest from the top, then we're looking at longs, or a daily close below the 20 moving average or the 4,000 level if the moving average moves down a little bit. If we get a close below the 4,000, then we're going to start aiming for the 3,900 level, which I think is the real support after 4,000. I think it could get here very quickly if it actually breaks the 20 moving average and closes below it, because there isn't a lot of movement in between, and this is a very strong level for it. As you can see, I can highlight about 15 touches on a very important time frame like the daily. So very important to factor that in. Yeah, we can drag that across there. That's the 3,900 that we're talking about. So that will be our target if we get a daily close below the 20 moving average, and we look to short at that point there to try and get there. So pretty good trading on. If you want to scalp, you need to scalp between the 20 moving average and the 41.80, and until it breaks either of those zones, yeah, don't get involved in any big long swing trades until we actually see a significant move, and that's going to be a daily break. Well, I hope everyone's had a great week's trading. I think we had some really good opportunities again, and I think, look, markets are well and truly moving now, and all of the levels that we keep talking about are holding up, so hopefully you're able to take advantage of those. Have a great weekend. I look forward to seeing you all next week.